Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Scott Bauer. Hey there, Scott.
Jeff, how are you?
Well, I'm doing great. A lot of turkey coming my way this week, so how do I not have a smile on my face? But it's interesting. We have some optimism in the market. Continue U.S.-China trade tariff conversation. Just keep on pushing equities higher. So I know this recent news about finally drilling down on the IP, the intellectual property component of the negotiation, that's on the table, and that's a positive for the marketplace.
It sure seems to be. I mean, it may be a make or break, but at least it got to that point, and I think that's why the market is taking that very optimistically.
Well, in the market, it seems like there's not going to be any more negotiations, but I think we have to be realists going to the end of the year. We only have 25 trading days left. Will we see some more volatility? Because right now, volatility really is suppressed.
It is really suppressed, and I think we should see more volatility, and we probably will going into the OPEC meetings, maybe further in December.
Well, let's get this first lightning round, pal. You ready?
Absolutely.
Turkey time. Well, we talked about big Thanksgiving week, shortened holiday week, but it's interesting to see the trade deal optimism. Equities right now about 15 handles away in the E-mini S&P 500 from the all-time highs, which were just recently made. But where do we go from here, Scott?
You know, this grind higher certainly seems to be in the cards here, especially with this shortened week, lower volumes typically, and we could see that grind higher.
Well, what type of trade example? Because right now it's really interesting. We are seeing that volatility very suppressed. But what type of trade example can an active investor typically utilize?
Sure, and even with that suppressed volatility, I'd like to sell a December week 1 E-mini S&P 500 3200 3250 call spread. It expires December 6th. The selling of this call spread allows an investor to collect a half a tick, 0.5 ticks, or $25.
No, and I understand this is less premium than we typically collect, but let's remember this call spread that you highlighted, it's about 3% out of the money. So a little bit further out of the money, giving the market a little bit more room to run higher because it's been up and away since about 3,000. And the December futures contract was trading around 3130, which is really close to that all-time high, but the at-the-money volatility, Sky, where was that?
It was 8.54, which is really low, and we talk about selling premiums when volatility is higher. But everything you just said, Jeff, with equity market nearing its all-time highs, shortened week, that's why I'm doing this.
Yeah, and I think it makes a lot of sense here. You're going further out of the money, you're going to collect less, but at the same time, you're taking the opportunity that the market would have to move another 3-4% higher for this trade example not to work out.
Exactly.
All right, great stuff, Scott. And please remember, these are trade examples, not trade recommendations. Let's move into the second lightning round, pal.
All right, let's do it.
Crude oil. Well, you hit the nail on the head. You talked about a potential OPEC meeting. There's a lot of moving parts right now in the energy space.
Absolutely, and China's the world's largest crude oil consumer. So you've got that playing along with the OPEC meetings coming up December 5th and 6th, and a lot of jockeying for positions in the oil space right now.
No, I think that makes a lot of sense. The China component, as they are the largest consumer, if we do see continued trade optimism between the U.S. and China, there will be a support in the crude oil market. So what I'm looking at for my trade example, Scott, I want to be a seller of the December week 1 crude oil $56.54 put spread. It's expiring next Friday, 12/6, but this put spread will allow an investor to collect about $340. And this is pretty important because we are seeing the support be correlated to the equity market.
No doubt about it. And January futures here were trading about 57.90 at the time. And at the money volatility, unlike in the prior example, at the money vol is actually on the upswing here around 31.58.
Yes, and that's why that elevated premium, that $340 that this trade example allows you to collect, it's $2 away. But if we do see trade optimism in the next 25 days continue, all we actually need is about 7 days for this trade example. But we see a support or a floor in crude oil, but it is correlated to the equity market.
Absolutely market. Equity markets, keep rising in this grind higher, and that should be very supportive of oil here.
All right, well, happy Thanksgiving to you, Scott, and thanks, as always, for coming on to Striking Options. And please tune in every week as we will continue to strike options.